Rahim. Now, students, let's begin with the AS and A level accounting paper for CIE, February March 2021. So let's go and read the question. So a business values its inventory at the lower of cost and NRV, net realizable value. Which accounting concept is being applied? So business entity duality matching prudence. So first of all, we need to know what all these concepts are. So let's go to my working, and if I see business entity concept. So it is one of the accounting concepts that state that business and owner are two separate entities and therefore should be considered separate from each other. So here this is not matching. So I would highlight this as red. Then duality. It states that every business transaction should have a double entry, a debit and a credit. So do you think that there is anything to do with the recording of the transaction? No. Then matching states that expenses incurred should be matched with the revenue earned. So is there any expense incurred or revenue earned? No. So by default, we are left with this answer prudence. So I will highlight it as green. So let's read. Prudence is a fundamental concept of accounting. We say that liabilities, expenses, and losses should never be understated. And here is an example, if liabilities are under-recorded, it may result in huge outflow of resources. So here we are recording inventory lower of cost on NRV. If we do any sort of mistake, it will result in an overstatement of inventory. So we are applying the prudence concept. So this is our answer. Now, question number 2. On 1st May, Tom sold an old motor vehicle with a net book value of 10,000 to Arnold for 12,000. Paid 7,500 by check. Net effect of this transaction on Arnold's accounting equation. So let's go to the working. See, the net book value is 10,000, sale price is 12,000, payment 7,500, and the balance remaining is 7,500. So Arnold has to pay this amount. So it will increase his liability because it's payable balance. Like Arnold has to pay to Tom. So if I go to the answer and see that there are two options, that increase of liability by 4,500 and increase of liability by 4,500. So the answer is B or D. So let's see the accounting equation. So if I see the accounting equation, which is assets equal to liability plus capital. So assets question mark, liabilities 4,500. So let me ask you a random question, like Arnold is purchasing an asset. So is he paying by shares? Anything which involves the movement in the share capital? No. So liability is 0. Therefore, if I see, so assets equal to liabilities per capital. So assets would be 4,500. If I go by this accounting equation, my answer should be D. No effect on equity capital, and assets are increased with 4,500. So that should be the answer by the accounting equation method. Since we are doing it this way, I may not be able to answer it. If you have any queries, you can comment on the video below and I would be able to answer your questions. Then going to the third question, which is, which item is not included as part of the capital cost of a new machine? So cost of not included. So we will see which is included. So see, cost of delivering the machine to the factory, it's included. Cost of installation is included. Interest on loan, it seems suspicious. Invoice price of the machine. So I have a tutorial note for you guys in which if I copy it to here, The cost of equipment, vehicles, and furniture include the purchase price, sales tax, transportation fee, insurance paid to cover item during shipment, assembly, installation, and all other costs associated with making the item ready for use. So, is there anything mentioned regarding the interest? No, because you are using the cash to buy. So the interest is not a relevant, not it's irrelevant. So answer is C. So answer is C. Then question number 4. Why does a business charge depreciation on its non-current assets? So to retain profit for the replacement, to show the correct value of the asset. Okay, this seems a little bit correct. To show when an asset needs replacing? No. To spread the cost. So what do we do by depreciation? Like, let me give you an example. If we have a cost, 10,000 cost, and useful life 4 years. So depreciation would be 10,000 divided by 4 equals to 2,500. So 2,500 over the 4 years. So to spread the cost of the assets over the useful life. So this is the answer. So answer D. Then next question 5. The net book value of motor vehicles of company shown at the beginning 312, at the end 305. During the year, old vehicle was traded. Part exchange was value of 8,000. Remaining purchase price was 30,000 paid by check. What was the depreciation charge for the year? So let's go to the calculation. See, beginning of the year 312,000. Part exchange is 8,000 and remaining paid by check. So 30,000. So what do you think? Let's take a moment to think. See, at the beginning, 312,000, then 8,000 plus 30,000. Let me move it to here. See, because a vehicle costing 8,000 was replaced, so 8,000 added, and then remaining paid by check, 30,000. So 350,000 was the total net book value. And at the year end, it was 305,000. So 45,000 is the depreciation. So the answer is C, 45,000. Then moving on to the next question. The bank statement of a business showed a credit balance of 4520. This did not agree with the cash book. Following errors. Bank charges 89 had not been entered in cash book. Unpresented checks 680. Dishonored check 210 appeared on bank statement but not in cash book. Sale receipt 750 entered into cash book, not appeared in bank statement. Bank balance to be shown in SOFP. So let's go to our working. See, I've written over here. So balance as per bank statement, which is 4520. Bank charges of 89. So see, this had not been entered in the cash book, but they had been entered in the bank statement. So effect of 0. Then unpresented checks. So unpresented checks of 680. So these should be deducted from the bank statement as they were present in the cash book, not in the bank statement. Then dishonored checks. So appeared on the bank statement but was not shown in the books. So it is already appearing in the bank statement. So effect of 0. Then sales receipt entered in cash book but not appear in bank statement. So a sale of 750 was made. So bank balance was increased. The balance to be showed in SOFP. So sum 4590. If we see, our answer should be B. 4590. Then moving on to the next question. What may help a bookkeeper detect errors in the account records of business? So books of original entry, sales ledger, statement of financial position, and trial balance. So what do you think? See, detecting errors in the accounting records of business. So trial balance, it's always there. So if I see in C and D trial balance, now I have to choose between 2 and 3. If I see 1 and 3, so 1 is obviously wrong. Now 3 is appearing here. So let's see. What is the statement of financial position? So it cannot be statement of financial position because it's made from the trial balance after the correction of errors. So sales ledger control account. So the answer is C. Then moving on to question number 8. Closing balance on purchase ledger control account is this. Purchase undercast by 1000. So if it has been undercasted by 1000, so should it be increased by 1000? So if I would add to my working 163762 and add 1000. So 164762 answer. Then moving on to next question, question number 9. A business calculated draft profit as 15,000. Following were discovered 600 understatements, sales journal posted as this, then repairs entered into the cost account, salaries included travel expense paid to salesmen. So correct profit for the year. So draft profit. So draft profit is 15,000. Journal expenses understated. So 600 should be deducted from it. Then sales journal had been posted as this. So it has been posted as 56590 instead of 55690. So 900. See, it should have been posted at 56590, but instead it has been posted at 55690. So understatement of 900. So 900 should be deducted. Then repairs entered into the cost account. So overstatement of assets and understatement of expenses. So 1100 should be deducted. Now the salaries account included traveling expenses of 2400 paid to the salesman. So this entry is there to confuse you. See, salaries account included, so it relates to the payroll. Nothing to do with the effect on profit because it's already included. The correct profit is 12,400. If I see, so answer A. Then moving on to the next question. A sole trader maintains a doubtful debt provision of 5% of receivable. Doubtful debt start was this, and information available as this. Effect on profit due to change in provision. So moving on to question number 10. See, 5% of trade receivable. So 5% of trade receivable. So this into 5%. So he maintains it at 1875, and at the year end it was 2750. So it should be increased by 845. So if I see, oh sorry, 2750. So increase by, so answer number 10 should be C. Then moving on to question number 11. that Isalba has a financial end of 31st December. On 31st March 20, transferred private vehicle to business amounting to this. Her profit for year end, drawings, depreciation. Then she took goods at a cost price of this with a selling price of this. What was the increase in capital account balance? So here's the question and here's the answer. So transfer of vehicle of 12,000. Then profit of 7,800. Then drawings of 8,000 and depreciation would be 0. Why? Because depreciation of 900 had been provided already. So effect 0. Then drawings. So drawings at selling price or cost price. Drawings always at cost price. So 10,800 would be the effect increase. So 10,800 is the answer. Now moving on to question number 12. At the end of his first year of trading, trader lost all of his inventory in a fire. He knows values of sales and purchases and wishes to calculate the value of inventory lost. Which ratio should he use? So these are the turnover days. So no, no, no. Answer is gross margin. Why? Let me tell you. Think of how you make the income statement. So see, it's sales less cost of goods sold. So here it comes opening inventory, then you add purchases, then less closing inventory, and you get your gross profit. Then moving on to question number 13. X and Y were in partnership, sharing profit and losses equally. Z was admitted as a partner and the ratio of this. On the date of admission, value of NCA was this. Goodwill was valued but not to be retained in books. What was the effect on X capital account? So we won't be going into the details of the partnership question, but the answer to this question is C. Increased by 27,000. Then question number 14. Which items would appear in the partnership appropriation account in the absence of a partnership agreement? So whenever there is no partnership agreement, there won't be any interest on drawings and there won't be any partner's salary. So there would be only 1 and 4. So answer would be C, 1 and 4. Profit and partner share of profit. So this is a theoretical question, so you need to revise this. Then question number 15. Annie and Bernie have been partners sharing profit and losses in the ratio of this on they decide to reduce interest on drawings. Annual interest on drawings for the year ended is this for Annie and for Bernie this. Which effect did this change of the balance on Annie's current account? So this will require a calculation and we would not go into details of partnership right now, for which I will make a separate video. So answer is C. Then question number 16. The total of shareholder equity at 31st December was 45,500. During the year ended 31st December, the following took place. An issue of 10,000 ordinary shares of 1 at a premium of 0.25 was made. So let's see. watching.